Hello everyone, John Solyman, the Money Doctor, reaching out to you guys from Newport Beach, California. Today, I have the pleasure to actually introduce to you one of my strongest business relationship, somebody that I know for quite some time now, and his knowledge, his experience, his service for our clients and his clients it always blew my mind away. Okay, he never lets me down, always surprise my clients. So he's in the business lending and finance industry for over 17 years and counting. Okay, he's I would say top of his colleagues and fellow, I would say, associates and the people that in the same industry on the whole U.S. Okay, hey, I'm not gonna take it away from him. I'm gonna give him the chance to blow our mind away more. Okay, Mr. Tipu Chaudhary. Okay, it's a pleasure having you with me today, and thank you for your time. I know you're always busy. He's always flying around, so I would love to introduce you to us and to our audience, and welcome you to the Money Doctors and our show that sometimes I offer to my clients.
Well, John, thank you so much for that very, very generous introduction. I hope I live up to it during this the next 20, 30 minutes that we're going to have a conversation.
There you go.
So, and it's wonderful to be with you here on a beautiful Saturday morning in Southern Orange County.
Great to have you, though.
Appreciate the opportunity.
Great to have you. So, without further ado, Tipo, can you please give us highlight about who you are and who you represent and what of some of the services that you offer our clients? I know it, but I want you to shine it because I know you more.
Sure, certainly. So I am actually Senior Vice President for SBA Lending with Byline Bank. I actually finance businesses myself, and then I also manage a team. I have a team of folks in Colorado and Utah. I happen to be here myself in Orange County in Newport Beach. That's where my office is. So Byline Bank, we're a Chicago-based bank. We are actually the second largest SBA lender in the nation.
Wow.
The SBA's fiscal year ends in September. The numbers recently came out, and this year, again, we're number 2 in terms of volume. We finance businesses all across the nation. While our head office is in Chicago and we have a huge retail network in Chicago as well, we have over 60 branches in the city of Chicago. Outside of Chicago, we have loan production offices in various states, including California, Florida, Tennessee, Ohio, Colorado, Utah, multiple states. So our focus and our bread and butter is financing SBA businesses using the SBA program. We use the program to its fullest, and I'd be happy to share with you what the benefits of the program are and what type of businesses we finance. But that's what I do on a day-to-day basis, and I've been with the bank now for over 12 years.
Oh, wow.
So it's been a nice long run.
Wow.
And I've been in the industry, like you said, for a good 17 plus years or so now in banking and finance.
Wow, wow. Now you guys know what I'm talking about. Okay. So for our regular average business owner and some of the savvy clients that we have as well, usually they look at a bank name that their eyes are familiar with. For example, the big retail or the big banks that they have offices everywhere. Okay, how we can break down to them the difference between a bank that is specialized in business lending, like a Byline Bank, okay, and your regular banks that you're not gonna see offices everywhere, and you say, "Oh, I never heard about it."
Right. True. That's a very good question. So when it comes to SBA lending, there's actually 3 different categories. So SBA offers a license to banks, and the top tier is considered a PLP license. It's known as Preferred Lending Program.
Okay.
Then there's a CLP license, which is a Certified Lending Program.
Okay.
And then there's a GP license, which is the General Processing Program. So you always want to look for a bank and work with a bank that has a PLP license, because what that basically means that SBA has delegated authority to the bank to be able to make the decision underwrite the loan, and if the bank is comfortable with the loan and follows all the parameters of the program, can actually fund the loan. But if you have the CLP license or the GP license, then as a bank, you're still in the process of working towards the PLP license. So while you underwrite it, you still have to rely on SBA to do part of the underwriting, look at the paperwork to simplify it, and then you can close a loan. So that's one thing that you always want to look for.
And this is huge. We're doing everything from A to Z.
Yes, we are a preferred lender. Most big banks are preferred lenders. You know, your Wells Fargo's and Chases of this world and Bank of America's. We are a preferred lender. Obviously, we're the second largest in what we do. We did more volume than Bank of America or Chase or Wells Fargo for that matter in the last fiscal year and prior to that as well. So we've been in the top 5 for many, many years. So we're a preferred lender. So that's one thing that business owners always want to look for, because that actually there's a misconception out there that if you're going to go with the SBA program, it may take 6 months to close a loan. That's unfortunately not true.
I heard that before.
Yes, and that's not true. When you actually work with a PLP lender, you can actually close a loan in 45 to 60 days. Now, of course, that also means that the borrower
has to be a clean cut.
Yeah, I mean, the borrower has to be also, cooperative. Things are coming in, paperwork flow is good. But we have actually closed loans in 30 days. That's really fast. That's not the norm. But 45 to 60 days, you can close a loan start to finish. And that you can achieve if you're working with a PLP lender. So that's important. Then the other thing is, as a business owner, if you happen to go to the SBA website, it lists the top most active lenders, and you will see Byline Bank's name. So we're not a household name in terms of retail banking, but in the industry we're very well known. But I would always say that folks should look at the SBA website and they will find us there. So we being a preferred lender, and not only that, since it's our focus, since this is what we specialize in, we know the ins and outs of the program and how to use it, and that's what helps
really
us.
Good at it. So. That's good.
Yeah.
So same like I use the same example in my industry. Okay, it's some of the financial institution that we use or the insurance carrier that we use is not a name that you see on the TV all the time. I relate that in a simple analogy. Have you ever heard or saw a commercial for Lamborghinis? Pretty much, you're not going to see a commercial for Lamborghinis. Why? They don't need to do the commercial. And the point is, whoever looking for a Lamborghini, or this is what he's looking for, he's going to go to get it. He doesn't need a commercial with somebody to drive on.
Yeah, so we're the supercar of the SBA.
Here we go.
Yeah, thank you for mentioning that to the world, John.
Here we go.
Because we are.
Yep, that's what it is. Here we go.
It could be Lamborghini, Ferrari, McLaren, pick and choose, whichever one is your favorite.
Yep. So to make it simple for our audience, okay, SBA versus your regular going to the bank to get a business loan, which is like a conventional loan.
Sure.
So SBA versus conventional is just some highlights though for our average client that is right now trying to expand his business or acquire a new place or a new business. What they need to know about SBA versus conventional, pros and cons, which one is which for what, you know what I mean? Give me some idea about that.
Sure. So this question actually comes up a lot, and there are a lot of benefits to the SBA program which folks are not always aware of and not familiar with. So let's talk about business first. If you're going to buy a business, most of us as banks, pretty much across the board, when we finance a business, we don't amortize a loan more than 3 or 5 years.
Okay.
When you're financing a business, whether you're buying a business or you're refinancing some debt associated with a business using the SBA program, it could be equipment, it could be a partner buyout. Let's say you and I, John, own a business together, and I am looking to retire now. So I ask you, John, please, I'd like to retire. You need to buy me out and pay me out. Now, are you going to use your business cash? Probably not, especially in today's environment. You need that cash for working capital and to run the business, or you need to, save your personal liquidity as well. Well, that's where the SBA program kicks in and is a beautiful way to be able to buy out a partner. We will do that loan for a partner buyout. That's one of the uses. So, but where I was going with the amortization, the first thing is that SBA loans are amortized over 10 years. versus 3 years or 5 years. The conventional loans are 3 or 5 years. With a 10-year loan, which is fully amortizing, by the way, so there's no balloon, your cash flow improves. Your payment is lower, so that helps you with your cash flows. So that's a big benefit.
Wow, yeah.
Second thing is that in conventional loans, when you're buying a business, you have to have a much bigger downstroke. Your equity contribution has to be much larger. Now with SBA loans, you can buy a business with as little as 10% down. Now that's predicated on strong cash flows and experience. As long as that is there, you can buy a business with as little as 10% down, and we've done that many a times. That's another huge benefit. Thirdly, collateral does not drive the decision. So, for example, let's say someone has a pharmacy.
Okay.
And they have, I don't know, $1 million debt against that pharmacy. They borrowed monies for equipment, inventory, working capital over the years. They're looking to refinance that. We're going to look at the cash flows. We're going to look at the experience. Obviously, the gentleman or the owner has owned it for a long time. The experience is there. But what about collateral? There's only some inventory, some furniture fixtures. It's $1 million refinance. That's all the debt that the business has. But maybe there's only $200,000 worth of collateral because it's only some inventory, furniture, fixtures. Conventionally, we won't do that loan because we have lack of collateral.
Okay.
In the SBA world, we will do that loan, even though there's lack of collateral. Why? Because we have cash flow, proven cash flow, and experience. So now you're able to restructure your debt, possibly lower your payments because it will be over 10 years. And without additional collateral, you have a better structure for your business.
Oh, wow, yeah.
So lack of collateral is not a reason alone to deny a loan in the SBA world. That's a big benefit. Another important thing is that these are fully amortizing loans. So there's no balloon. In 2 years, 3 years, 5 years, you don't have to come and refinance it again and renegotiate terms. That's a huge benefit, so you save that cost. On the real estate side, these are 25-year loans.
Oh.
So, and those are also fully amortizing loans. So you have a 25-year loan that's fully amortizing, so that's a huge benefit as well.
So versus conventional, when there is a real estate involved, it's the same amortization of the loan, so it's 3 years or 5 years, or
no,
it varies?
Conventional loans, when it comes to real estate, those could be 20, those could be 25 as well. Okay. It depends. It depends on the type of property, it depends on the institution, but in the SBA world, it's always going to be 25 years. You won't have a 20 or you won't have a 15 if the property is considered, the life of this property maybe is X number of years, we're not going to fund beyond 15 years. In SBA, real estate will be 25 years. Equipment can be also, it's generally speaking 10 years, but if the life of the equipment can be proven that it's much longer, that could be extended to a longer amortization as well. It could be 15 years, it could be 12 years, it could be 20 years. So depending on the type of equipment, you can get a longer amortization as well.
So in other words, what I'm feeling, I'm getting from what you're saying, there is more a chance, an opportunity for the business owner that's expanding or refinancing or acquiring a new business to have more cash in his pocket to kind of like get through the first few years that we all know in business, that maybe you're still getting your name out there, you're still branding and doing all this. So more cash flow for you to sustain the business. True. And you don't have to be from the get-go when you start, have this payment that you have to do right away. True. So this is a good thing. This is actually a great point.
Yeah, so lower down payment, longer amortizations, and then lack of collateral, so or little collateral. All of these are benefits, and you can finance a loan with little collateral, with lower down payment, and have a longer amortization. So another thing is, John, a lot of times, for example, someone is looking to retire. They've owned the business for 20, 30 years, and now they want to sell it, and they want to sell the business, let's say, to one of the key employees. And the concern comes in, well, I would like to sell the business to the key employee, but the key employee doesn't have enough equity to put into the deal. Well, that's where SBA program, again, is very beneficial, because the key employee can probably put minimal, again, 10% or so, and if we need more equity contribution, and the key, conventionally the key employee may need to put in 20 or 30%. Here, if 30% equity is required, because cash flows only support a 70% loan, the key employee could put in 10%. the seller can probably carry 20% or 10%.
Okay.
That's another way of structuring a deal. And at some point, if there's some question answers in the future, I can get more into. I could get into the detail. But there's a seller note component. So the basic point is there's different ways to skin the cat when it comes to equity.
Okay.
There are other options. So that's where if you're looking to sell, you should certainly, look at the SBA program because there are various opportunities there.
I'm getting that it's kind of like very lenient, flexible, that you guys can work with whatever you guys have. There is no clean cut, no, we don't do it. You need to see the case. And sometime if the conventional or the big banks wouldn't do the deal, sometime the SBA would have a higher opportunity of financing if the deal makes sense with no collateral, but there is a cash flow and experience. You guys, sometimes there is a higher chance of working the deal.
So there's a couple of things, and there's a good point that you make there, John. SBA program, SBA's guidelines. So SBA itself does not lend any money.
Okay, it's a program.
It's a program, it's a guideline, and we as banks follow those guidelines. Now, you have to be an SBA approved lender, so you get the license from SBA. I talked about those three categories earlier. So within the parameters of that program, different banks operate differently. Some banks use the program to its fullest, like us.
Got it.
And there's very few. So let's say somebody's buying a business for $5 million and there's minimal collateral. We will still entertain that deal and look at it.
Okay.
As long as cash flow is there, as long as experience is there, being prudent, we will look at it. But there are banks out there that are using the SBA program. If they're funding a loan, call it $5 million again, even though there's a SBA guarantee behind it, and the program will allow you to finance the deal without collateral, the bank would say, no, we will finance it, use the SBA program, but we still want to have collateral. So there is a difference in banks.
Okay.
Some banks, they embrace the program to its fullest. Others will pick and choose what they would like.
Especially if offering the conventional two at the same table.
Yeah. So and they'll see every bank has its own credit box.
Got it.
The difference between us and most banks is I'm not here to say that we are very easy and very flexible. No, we are a bank. We're going to look at the cash flows, look at the numbers, look at the experience.
I work with you, so I know you do your work.
So we're going to look at all of those things.
Yes.
But we're willing to sit down and listen to the story.
Yes.
If it makes sense, we're not working with, okay, here's our matrix. If you check these boxes, we'll talk. Otherwise, no conversation. I'm not interested in listening to your story. We're willing to, help us understand what's happening. If we can understand that and it makes sense and the numbers support it, we'll be willing to come to the table and see if we could make the structure work.
Great. So you actually opened my eyes to a few points that I wasn't aware of before. Okay, so that means
this is an eye-opening morning, John.
Yes, that's what it is. Happy Saturday. So to address or to maybe shine some light on some of the opportunities out there for professionals or business owners that it might be beneficiary for them to actually look into getting a business loan or looking into SBA loans. What are opportunities and some uses that people can use for the SBA loan? Would they say maybe industry-wise or maybe opportunity-wise? Yeah.
So SBA actually within the program, there's a few different subsets. There's the SBA 7A program, there's a 504 program, there's a working capital line program. So I won't go into all of those details, but what I'll mention, the 7A program, the SBA 7A program, it's the most versatile of all of the SBA programs. Under the 7A program, you can buy real estate, you can buy equipment, you can buy a new business without real estate, so basically just goodwill intangibles. You need marketing dollars, working capital, that could be funded in the loan. We talked about it earlier, a partner buyout. Let's say you have a pharmacy today or you're a franchise owner, you have 5 Popeyes or 3 Wendy's or so, you want to buy another 1 or 2, or you want to construct a new one, you can do that. So that's we consider that expansion. You can do that. You need to refinance your debt. You have debt that's right now on a shorter amortization or a higher interest rate. You can refinance that debt. You are in a business, you want to buy a healthcare facility, you're a doctor who's been actually operating, or you've been working for someone as a medical professional,
Yep.
and now you have a lot of experience, and you'd like to go on your own and open up your own facility. You can use the SBA program for that.
Okay.
So there's a multitude of uses of the program. Anything basically related to a business. We do construction loans, which are ground up construction. We do refinances. We do real estate. We do people who are just, you're a doctor, let's say, and you've been working for a practice, and now you basically would like to go on your own, and you have identified a practice that another doctor is, let's say, looking to sell.
Oh wow, okay.
Because he or she is
it
retiring.
happens a lot, yep.
Yeah, that owner is retiring, that doctor is retiring. You can basically now, you have the experience, obviously, you've been working in a facility for X number of years, and we can finance that acquisition for you, for example.
Even there is not much collateral.
Collateral alone is not going to be the reason.
Gotcha.
Cash flow is king.
Exactly.
Cash flow has to be there.
I got you.
So if somebody comes to me and says, we have this piece of real estate, it's worth $5 million, and we just need $1 million. So, and this happened a lot back in the day, and this happened during the past, financial crisis as well. A lot of times banks were lending, fine, there's $5 million collateral, the borrower only needs $1 million, let's lend it, we'll turn around and sell the asset if the loan goes bad. I'm simplifying it, but just to simplify it, what happened was, when the real estate market, turned upside down, there was no $5 million building there. It wasn't worth, what we as banks had expected, and now you have $1 million loan out there. So brick and mortar does not pay a loan back. What pays a loan back is cash flow. So if you come to me and say, I have a $5 million building and I just want $1 million, but your financials don't reflect that you have enough cash flow to pay back that $1 million, we're not going to be able to fund that. But if you have only $200,000 worth of collateral and you need $1 million, and your business can support paying that $1 million, yes, that's something that we will look at and see if we could do for you. Cash flow is key, and cash flow is king.
There we go.
So.
All right. Sounds good. So let's say, for example, I have a friend of mine that is a dentist. Okay, that he just finished dentistry school. Okay, maybe like 3 years back. And he's been practicing with a doctor for 3 years. Okay, his income is well in the 150 to 200,000. Okay, consistent salary is good to go. Have his 401ks, has his retirement plan set aside as well.
Sure.
Okay. Sure. And right now he's thinking about, what, it's time for me to get my own practice. Okay, and kind of like you addressed that. Would you guys work with a professional that has been in the industry for 3-5 years, have decent cash flow, have decent experience, and at the same time doesn't have a lot of equity or doesn't have a lot of collateral to put in the table?
Short answer is yes.
Okay.
So we're looking at, I'll go back to what I said earlier, the basics. Experience. The experience is covered with, he or she's been working for 3 or 5 years. Collateral is not the driver again. Equity, yes, you need, there's a minimum of 10% that you do need.
There you go. Yes.
However, we can look at the overall deal and see, all right, you're bringing in 10%. Maybe the seller can carry a certain percentage note. That way the leverage can be reduced. Maybe we need that to improve the cash flows as well. So, there are a few different ways that this could be structured. But yes, we would certainly look at a request like that.
Do you guys need to have a business or a place that's ready and he wants to go for, or you guys do the pre-qualification and after that he go find a business?
Yeah, so that's actually a very good question, because that question comes up quite often. When you and I, we want to go buy our home or so, everybody gets a pre-qualification letter, because it's based on, all right, here's your W-2 income and here's your credit score, you fall in this bucket, fine, you're pre-qualified. It's a little different in the world of business finance. Yes, I would love to talk to that individual who's looking to buy the business and get an idea of their experience and their personal financials, but there is no real pre-qual because it's a package deal.
Got it.
You have to look at the business and understand that business. If they're going to buy this business, what are the trends of this business? Are the trends upwards? Are they trending negatively? Is it flatline? What's the cash flow? What do the expenses look like? Is the individual living in in city A and the business is in a different state? When they move, how would that work? It's just all these different factors.
So you guys investing in the relationship, not in the husband and the wife,
Well,
like the whole thing. It has to work. Okay.
The puzzle has to come together.
Got it.
As an individual, as a buyer, you're one piece of the puzzle, and there's the other piece, which is the business itself. So you have to look at both and see if they mirror.
I like that.
If they match.
I like that because I think by doing this, you advise them about what they're signing up for, what is the expectation, and you're not setting them up for failure. You're not just getting in there funding a loan, and at the end of the day, this business, you're actually doing the business dig up. You're doing the escrow for them, if I would say, for the business.
Yeah,
kind of thing.
Failure doesn't look good in these scenarios.
Yep,
So we do our utmost.
That's good.
Sometimes unfortunately things happen, but we do our utmost.
That's good.
For the borrower's sake, because you are also, sometimes you look at a deal, you look at a credit request, and it doesn't make sense.
Yeah.
And a borrower may not like to hear that, but I believe you're doing that individual a service as well.
Yep, exactly.
Because just trying to fit something in a box, if it doesn't really fit, you're not doing any service to anyone. It could go by the wayside, and that will not be a pretty picture then.
Yep,
so
that's true. Well, thank you, Tipo, for your time. And thank you actually for some of the, I would say the surface, of the SBA loan. I know I talked with you a lot, and I know there is a lot of details that he tried to explain it to me many times. I only got the surface of it. That's actually when I sit with some of my clients, like the business owners or professionals that we sit with, it helped me identify a potential of them to probably increase their revenue from their business by maybe bringing Tibo on the table to advise them maybe for potential more cash flow or more business lending that comes on the table to help them grow their business. So thank you, Tibo. You've always been a great help to me.
It's been a pleasure, John. I'm glad I could be of some service. I hope this will help folks out there. I'm always there to answer any questions. And you've made me talk so much this morning. How about, would it be okay if I ask you if you just share with us a little bit about what the Money Doctor does?
Oh, well, I like to talk, so. Okay, thank you, though. Since today we're talking to business owners and professionals, this is a select group that we work with, and I would say this is an area of shine that we shine in, for professionals and business owners. We help them usually with their retirement planning that they have, any tax advantage that they have in their business. For example, we look at their tax returns, their business returns, and we see if there is a room for some tax deductions or tax deferral in their business, that can help them reduce their annual taxes that they pay, the responsibility as far as taxes, and at the same time help the business owner and the key people and in the business to actually build some good retirement over time that can be there for them. We're talking about 401ks, we're talking about IRAs, SEB IRAs, defined benefit plan. We do all that either in many platforms that we use. So whatever fits in there we use. For business owners, there is a huge need that I've seen. That comes with the partnership to using the life insurance that we use actually also for buy and sell agreements and stuff like that we implement. On the individual side, if I'm talking to a business owner that's making a certain figure annually, generating it, or a professional, a doctor or a physician, a dentist or an engineer or IT, that they're having a good revenue, there is some exclusive actually programs that we do. Is only exclusive for a certain higher income individuals, executive and business owners that generate certain figure, and they have to financially qualify for those plans. Financially qualify, you're talking like the same way they sit with you to get financially qualified for a loan. They have to financially qualify for those programs because we bring bank dollars, we bring lenders match into the plan for them. So they put $1, the bank or the lender will match 3. Okay, and it's a very solid product, but again, it's only for business owners and professionals that qualify for that. So we help business owners, whatever is fit for them. We usually sit, review everything, see suitability, see what's missing, see what's good, see what they need to improve on, and we bring professionals like Tipo and other professionals at estate planning if they need it, building a trust, putting some structure, LLCs, whatever for their companies. We review everything and we see what needs to be done, and we have an arsenal of solid people, like very, very knowledgeable, that integrity is number one for them. This is the main thing that I look at when I bring somebody to work or service our clients. Okay, that's why I take pride of bringing Tipo here, because he's proven that. And he's become a good friend of mine too outside business, because we share the same goals of servicing our clients, doing good by people, and thank God things are great, because you always, when you always give, you get prosperity.
And what you do and what we do as institutions, it complements each other as well. For example, in these SBA loans, there's a requirement of life insurance many a times.
Oh wow! Okay.
And that is where you come in. There's when folks have retirement accounts, there's actually a way to use that retirement account without incurring the penalty towards the down payment towards equity contribution.
Oh wow!
So as I was mentioning earlier, there's many ways to skin the cat when it comes to equity. So that's where what you provide your clients comes into play and can help as well with this with lending. So
this is really good. So if you're out there, you're a business owner, that you have your defined benefit plan and you have your SIP IRA that you've been funding for quite some time. Or if you are a professional, a doctor that's been working for a brand hospital for the longest, and now you're deciding to go out there and you have a retirement account of 401k or 457, 403b that you've been funding for forever, probably give us a phone call. Maybe there is an opportunity for you if you want to actually move to the next level, that there is something that you can do without that much stretch, financially, that much stress. Just phone call. I think I'll connect you with Tipo. Okay, and I will leave his contact information towards the end as well, so you guys can reach out. Thank you, Tipo, for your time. I know it's a Saturday and we have a whole beautiful weekend to go to. Thank you for your time. I appreciate you. And please let me share your information with my people.
Certainly, and thank you so much for the opportunity, John.
Thank you, Tipo.
Thank you.
Thank you. Thank you, guys.